for joining us for our Wake Up Clovis program. We're very happy to have our one of our Clovis Chamber board members and our guest speaker, Gary Winter, who's the managing partner or managing attorney with Lawvex here in Clovis. So Gary, usually when I start something like this, I like the folks to get to know who our guest speaker is. So why don't you just real quickly tell us a little bit about yourself and how you got to be the managing partner of Lawvex in Clovis and part of this community.
Oh yeah, thank you, Greg. Thanks for having me. Happy to be here and share a little bit with our business community about cryptocurrency and what's going on in that part of the world. My personal story is kind of grew up as an Air Force kid all over the country, and my dad and mom were from the Kingsburg and Fowler area. So when my dad retired from Air Force, we moved back here. I think I was a sophomore. So I went to high school in the South Valley, and always wanted to fly airplanes because I was an Air Force kid. So I went away to school for that, and I had a commercial airline pilot career for a number of years until I got laid off after 9/11 and had to do something else with my life, or at least prepare to do that, I guess. And so I went to San Joaquin College of Law here locally because we were, my wife and I were pregnant with our oldest child at the time, and it wasn't really an option for me to go away to school or something like that. So I attended the local law school, went through, and when I got recalled from furlough, I'd already passed the bar, and I was working at a local law firm. And so we made the hard decision to make a break and change careers. And I've actually been practicing law longer than I was a pilot. I had about a 9-year career as a commercial pilot, and I've been practicing now for almost 17 years. I originally came into the community as a business owner in 2009. I started my solo practice, and I was actually criticized for locating a law office in the city of Clovis because, quote unquote, no one will take you seriously with a Clovis address. And that was in 2009. And obviously that's complete garbage. And I think now a Clovis address is actually carries a little bit of prestige and maybe a sense of innovation. So we established my solo office in the what was then the brand new technology park there at 168 and Temperance in the Office Bay building, and it gave me a chance to grow and build. And then I had this vision for something that I described at the time as a hub and spoke sort of a law firm, because one of the things that was happening in our industry, as it was happening with other businesses at the time, was we were getting access to internet-based, cloud-based systems. And even though the economic period in 8, 9, and 10 was pretty rough, a lot of interesting things were happening technologically. And I was one of the very first adopters of cloud-based practice management for a law firm here in the Valley in 2009. So most lawyers weren't even having the conversation. They didn't even know what it was. And we started that foundation really, really early on. And I built up my own solo practice there at that Temperance and alluvial location to where I could begin to add partners. And I did that, and I branded the firm as Lawvex in 2014, with also being kind of one of the first in the area, to my knowledge, to actually slap a brand on a law firm. Everybody wants to practice as their last name. And we just sort of turned that on its head a little bit and said that we think that the law firm should be about the mission, not about the lawyers. And the Lawvex mission, and the reason we have a funny name, is that we're trying to pull some of the pain points out of law, take the frustration out of law. That's where the vexing name comes from. And we've established some corporate values to sort of live that out. And over the last 8 years, we've grown to 8 lawyers, 12, I think 13 staff. And we have offices now in Clovis, Madera, and Santa Barbara. So it's come a long way. Our firm is a full service estate and trust firm. We do everything from estate planning to administration, probate, trust administration, trust and estate litigation, conservatorship, guardianship. So from those areas, we do spin off into some real estate transactions. A lot of our clients are real property investors. And on the other side is business transactions. We form a lot of companies. We provide counsel on corporate governance, and we do what I would say small to mid-sized mergers and acquisitions for our local business owners. So we have formed literally hundreds of local businesses over the last 15 years or so, and a lot of them are our remain our clients and successful today. So that's kind of the story. That's where we came from, and that's what's going on now.
Well, fantastic. Well, we're happy to have you here with us today and share your knowledge about cryptocurrency. And when this first came about, I think it was during one of our Clovis Chamber Government Affairs Committee meetings, and you were attending the meeting, and you brought this up about some of the how cryptocurrency is changing or becoming more part of our business lives. And I think I reached out to you at that point and said, well, that would be a great topic for the Wake Up Clovis. So let's dive right into it. What is cryptocurrency?
Yeah, I think I brought it up, and I think it's probably appropriate to share at the outset here that it's probably worth exploring and just getting a preliminary understanding of what's going on, because I think it will be part of the future for a lot of us. And there's so much mystery associated with it that and there's a lot of dismissive stuff too, where people just say, oh, that's just garbage, or whatever, and some of it probably is, but certainly some of it's not, and I think that's why it's worthy of paying a little bit of attention to. So I just suggested that the chamber just begin to be aware of this, as the chamber is aware of many other things. Not to overemphasize its importance, but cryptocurrency, I think probably the better question to ask before explaining what crypto is to ask, what is the blockchain? And that's, I think actually the blockchain is what I'm more excited about for the future. And hopefully I can explain why, as we go through this conversation. But if you understand a little bit about what the blockchain is, then you can understand, a little bit more about what some of these things that have been created with the blockchain, like cryptocurrency and NFTs, and there will be more in the future. But the best way that I've heard to explain the blockchain is using an analogy to like our grantor grantee index for real property. If you've been involved with real estate in the past, you know that we use these documents called grant deeds or quitclaim deeds or whatever, and a deed is basically establishing title for a piece of real property. And in the local county, we have an index of those deeds, and each deed will have a grantor that's pushing the property away, and each deed will have a grantee that's receiving the property. And there's a concept in real property that says that there is a chain of title, and the chain is linked together by grantor to grantee, and then the next grantor was the grantee, right? The same person, another link in the chain, and then you have a consistent and a clean chain of title if the grantor grantee index matches, right? And the grantor grantee index, if you think about, before we talk about blockchain and how it changes, grantor grantee index is something we've used for literally hundreds, I don't know, maybe longer of years, but this is how we've kept track of property title. The downside of that index is it was originally on paper, and then it was on microfiche, and it's very difficult to search. And over the years now, we've had title companies putting things online, and it's hard to find answers to those questions as to who owns what, or was there a break in the chain of title. And something weird that can happen with real property and the chain of title is I could go down today and record a deed against my home, my property here, with a grantor other than the most recent grantee, and the official records and the county recorder's office will accept it. It's just going to create a problem with title, and they call it a cloud on title. And the recorder's office isn't going to analyze whether or not that actually was the grantor or the grantee. So you can end up with these weird things associated with your chain of title. And I'm just using real property as an example, but you could also use chain of title in any asset that has a pink slip or you know, some kind of evidence of title. And these conventions that we've used to have paper basically to show, you know, transactions of an asset and ownership from one person to the next are real clunky in the sense of how do you find out who owns it, and you can have mistakes made in it and all this stuff. So set that as the backdrop. This is what we've been using for hundreds of years. The blockchain fixes some of those chain of title problems. I mean, there's a reason why they call it blockchain, and the chain is being able to connect one block, which is sort of analogous to a deed in my example, to the next block. And the way that they do it is with computer algorithms. And I, without getting super hyper technical, basically the algorithms associated with the computers create a unique identifier, which is analogous to like a grantor, and then another unique identifier for the grantee. And you can connect these links in a chain of title, and it is extremely reliable, extremely accurate, because you don't just have one computer making these calculations. You have a network of literally hundreds of computers that are all, you know, working together to verify the accuracy of a transaction from one person to the next. So the blockchain is a word to describe the chain of title, the digital chain of title of a digital asset at this point. And it's verified by a distributed, meaning multiple computer ledger. And if you think of a you know, a ledger being, you know, in our real property index, grantor, grantee, and you have, you know, the tracking for that. A distributed ledger is the same thing, but it's tracked by many hundreds of computers. So what does that do for us? Well, it creates a lot of trust in the transaction, that the transaction is valid. It's very hard to fake. It's very hard, nearly impossible to create, you know, fraudulent transactions. In many cases, you know, you can decide as an owner of a block in the chain, which, by the way, the block can be a piece of cryptocurrency. Okay, so each of those blocks represent, you know, the asset going from one person to another, and that ledger will be compared and tracked next to each other, so that you have a tremendous amount of reliability between, you know, who sold, who bought, and so forth. The components of this blockchain are, you've got on one end, somebody would have to have a wallet, they call it, which is a digital place where you house the blocks in the chain that you own. And in order to transact and send your crypto or your block in the chain to someone else, they would need a wallet. And then you can actually send from yourself to this other person. And it's very easy to do because it's digital. And it doesn't matter whether that other person speaks your language. It doesn't matter whether they're in, you know, Nevada or, you know, Japan. And so these transactions that can occur digitally are highly accurate, very difficult to fake, and they're very fast, and they're you know, extremely flexible in terms of you know, geography or language barriers and things like that. So the blockchain is just a reference to tracking the sequence of transactions of a particular digital asset from one person to another. So once you kind of get that, then cryptocurrency and the various types of them, Bitcoin, Ethereum, Solana, all these different things that have been created, they're all built on this ledger that I'm describing called the blockchain. And cryptocurrency is just one one thing that you can do with it. I think there will be more things built on the blockchain technology in the future, but when you purchase a Bitcoin, you exchange cash for someone else's Bitcoin, or you can create, they're still mining Bitcoin, which is the creation of the asset. Mining is the process where all the computers that are working on this, they're going to generate the complex algorithms, and they have to use a lot of electricity to do it. And they generate a new block in the chain. That's mining Bitcoin. So I don't know, I could probably talk about this for a while, but I think if you can wrap your mind around the grantor-grantee index and thinking of those deeds as being blocks in the chain of title, and you can begin to understand what they're doing with the blockchain technology, except it's digital. So does that make sense, Greg?
Yeah, it does. So I guess I'm going to ask the next question. Who decides to mine more Bitcoin? Is it, and how does it keep its value if somebody's just arbitrarily adding more to the availability of it? So how is it keeping its value? And then who decides to put more on the market?
Yeah, I think so. At this point, there's a limited amount of Bitcoin specifically that is able to be mined. I forget the exact amount that they're going to allow. They haven't hit it yet. So you can still create new Bitcoin. And I have a client, for example, who is a Bitcoin miner. They have a big room full of computers in the Midwest, and those computers are constantly churning out the calculations on the blockchain technology. And they are not, so they're doing the mining process. The computers are doing the hard work for somebody who wants to mine a new coin. In exchange for that, they get a kind of a commission, right? And so they are not mining it, for themselves. Those are other people that are going to use that Bitcoin. But in exchange for their computers' hard work, they get a little bit of Bitcoin. And last I heard, I think they've been going for several years, and they had mined somewhere in the neighborhood of $50,000 to $60,000 worth of Bitcoin. And they're just paying the electricity bills. They set up the computers, and that's what they do. And there are people that do nothing but that. So I guess to answer your question, you could go and purchase a brand new Bitcoin. They'll pay a miner like my client to go do that, and give them a little bit in exchange for doing it. But I don't think that's going to last forever. I believe there's a limited amount that they're going to allow to be created.
Gary, and just before we move on to how it relates to our business, but if I had $1,000 and I wanted to buy $1,000 worth of Bitcoin, and there's I go online and I say I want to buy $1,000, where does my $1,000 go? Who gets it? Whose piggy bank does it go into for me to get $1,000 worth of Bitcoin?
Well, I think it depends if you're purchasing from another party who already had it, and if in that case, then you're exchanging cash for their Bitcoin. And just I think the best way to think of Bitcoin at this point is, the IRS is treating it as personal property. I think the tendency is to think of it like our US dollar. That's probably not the best analogy. It's more like buying a stock. So for example, you and I, for the business, audience here, we all know that if you create a company, you can issue stock from that company in exchange for cash, and you capitalize your company by issuing stock, right? What is stock? It's a piece of paper that says that you have a percentage of that, right? But you can also buy stock from somebody who's an existing shareholder, right? And I think it's the same thing generally with Bitcoin. When you mine it, it's coming from, I don't know where. It's the same thing as like issuing stock. Well, it's paper. What is it worth? Well, it's worth whatever somebody's willing to invest, right? On the other hand, if you buy your stock from an individual who's already a shareholder, that transaction is very easy to see and audit. You're exchanging cash in exchange for the shares from another shareholder. So that's probably the best example I can come up with.
well, we keep using the term Bitcoin, and Bitcoin is a brand. Is that correct? Should we be
Uh,
calling, is it like Kleenex versus tissue? Tissue is something you blow your nose with, and Kleenex is a brand of tissue.
yeah, I don't know if I mean, I guess you could describe it as a brand. I mean, there are multiple kinds of when we talk about cryptocurrency, there's a lot of different, there's probably hundreds of different cryptocurrencies that people have created on the blockchain technology. Bitcoin's just the most popular.
Okay.
You'll also hear of Ethereum, is probably the second most popular. Solara or Solana is another one. There's many, many, many of them. So, and I see in the chat, I think it was Dave said 21 million coins are available to mine. I think that's for Bitcoin specifically, and then no more. So yeah, so there's a cap for sure. And I don't know, I guess you could look at it as a brand. I've been told, and I understand that different types of crypto have some pros and cons, and I'm not sure I know enough about the nuances of each one of them to be able to tell you, why that is. There may be some very technical reasons I'm not aware of, but
Okay.
yeah.
Okay, so you talked about it being like a stock, and I can invest $1,000 and buy $1,000 worth of this. And what do I do with it? So I guess that's the next question. Do I just let it sit, and hopefully it increases in value at some point, and then I sell it as an investment? Or am I actually going to start using it as part of my daily cash flow in my daily life? So maybe you could talk about the uses of cryptocurrency and how it's used today, and then what you see in the future, its actual use.
Well, yeah. As it becomes more understood and more adopted, and as more people out there have conversations like this, and more business owners, feel comfortable accepting it, as a means of payment, then it becomes more useful to you. Otherwise, it very much is just like a stock, and you may or may not have any alternatives to be able to use it as a form of payment. The the stats out there are saying that there's an awful lot of money. I mean, the ones I saw, there was over $1 trillion at the end of 2021 that were invested in some form of cryptocurrency. Now that was 6 months ago, and if anybody follows the price of this stuff, it has dropped a lot. I think Bitcoin's down by maybe half since then. I'm not sure. I was in the 40-ish thousand per coin in 21. I think it's in the 20s today. Ethereum's down as well. So I don't know that the market cap of crypto is nearly as high as it was in 21. But so yeah, I mean, you could sit on it. I mean, I know some people that invested a little bit of money very early and have now tremendous amount of paper value of their cryptocurrency. And over time, I think more businesses will consider accepting it as a form of payment. One of the generational segments of our society that's been more ready to adopt cryptocurrency is millennials. They own, I think they're the highest percentage of folks that own it. I think 64% of millennials have some kind of investments, right? And then about 38% of them have invested in cryptocurrency. So if you look at that generation, 1 out of 3 or more of millennials owns crypto. I mean, that's to me is kind of stunning. I don't think that's true. I'm a Gen Xer, so I don't think that's true of my group, although I think we're not super far behind. I think it's probably 20 or 15% or something like that. But as more people have it, they're going to look for an opportunity to use it, right? And if you set up a payment processor, I mean, just like back in the days before we took credit cards, right? I mean, it used to be cash and check, and then we got credit cards, and you had to have a credit card processor to be able to receive the credit card. And there was lots of people that, and especially in my industry, right, in the legal industry, well, you were they look down your nose. You must be a sort of a door lawyer or some kind of, cheesy lawyer if you accept credit cards. And that was not that long ago. Today, if you don't accept credit cards, your clients are going to be pretty upset, and you're probably not going to get paid as often and as fast. So I think, I don't know that crypto will be as well adopted as credit cards, but I think having more options for your clients to pay you, and as the very, very new technology of blockchain and crypto advances, I think it will become probably more prevalent for certain businesses, right?
Okay, so you talked about that, currently it's almost like a commodity. Well, not quite a commodity, but a stock goes up and down in value based on who's willing to pay for it.
Right.
I guess what confuses me and most people is the word currency after crypto. And currency is like a dollar bill, and the dollar bill is backed by a bunch of gold bars in Fort Knox, right? So it keeps its value based on, if everybody was to cash in every dollar bill at one point, there's supposed to be enough money out there to cover it, right? Or gold, I guess, based on the gold value. So how does that happen if it's, and I have a wallet and I got dollar bills and I freely exchange them with a restaurant or a grocery store or whatever. So if it's a stock kind of a value, how does that convert if I'm getting the brakes done in my car and I go to the gentleman at the counter and say, I'd like to pay for my bill in cryptocurrency? So where's that conversion take place, or how do you see that happening in the future, where it goes from commodity to currency that's backed by something?
Well, yeah, I mean, you're asking two things. One is, why is it referred to as a currency? I think that people want it to get there. I don't think it's being, if you get to the fundamentals of it, it's really not being treated as a currency yet because it's not government backed. And I mean, the IRS is, like I said, is treating it as personal property. So it functions a lot like a stock, an investment. And so you can apply, the same rules. If I were to, own some stock in a small company, and I handed it to you, Greg, because your business gave me some goods or services, and I gave you that stock, that's probably going to trigger a tax event for me, right? So if, for example, let's just say I bought some cryptocurrency and I have Bitcoin that I purchased for $100, and now it's worth $500, and I owe you, Greg, $500 for your goods and services, and so I give you that $500 worth of Bitcoin. That is a taxable transaction for me, and I have to realize that the 400 of gain, and I have to track that and report that to the IRS as part of my tax return. So that is probably one of the biggest reasons why people are not using crypto more to pay for things, because when you do that, it triggers a tax event. So there are, potentially lots and lots of tax events as you buy lots of things with Bitcoin. The good news is there's websites that will follow you around, because the beauty of the blockchain is it's very transparent, and it's very easy once you have like my identification number for this particular Bitcoin. I can subscribe to a website that literally tracks all my transactions and spits it out in a ledger for my CPA when I do my taxes. Those things exist, but it is, I think it's one of the reasons why people don't use it more to just pay for things, because it does trigger that tax event.
Okay. Just curious, what businesses are already accepting cryptocurrency for goods and services? Are there any that you know of?
Locally, gosh, not off the top of my head, except I mentioned to you, I spoke at the charitable giving symposium a couple weeks ago before we had our board meeting, and that particular symposium is an event held by some of the folks locally that are local charitable foundations and charitable giving professionals. And they are now, because we talked about it and we showed them, you know, some ways to do that so that they could receive crypto as a charitable donation. And so I think that's coming. I don't actually can't think of local businesses that are accepting crypto, but it's actually not super hard to do. You can you can open a wallet, a digital wallet, and then add a plugin to your website that connects to that wallet if you're a little techie and sophisticated, or you have people on your team or vendors that can do that for you. Or you can go to a third-party payment processor and receive it that way. So it's not as hard to do, I think, as some people would believe. I think the bigger question is it a fit, you know, from a business perspective, right? Is that something that we want to do in order to, you know, make good sense in terms of the overall strategy for our target market in our business, right? So off the top of my head, I don't know any. We're thinking about it, you know, at Lawvex. I have had some people ask, and even if we didn't receive payment in crypto, just because of our, you know, our sort of take on the legal industry and the world. I mean, we're historically a very innovative law firm, and to be out there accepting crypto would distinguish us from our competition even more. And I think that that's a good thing. And as long as we can do it safely and ethically, then you know, we probably will in the not too far off future.
Okay, well, I see Steve Bassett, and Steve owns Clovis True Value online. So let's say Steve wants to be an early adopter and get more millennial business. And so I'm just curious if you wanted to, for retail. Now, for a law firm, I could see, okay, it's a little bit different, right? You don't have 5,000 SKUs, things like that, and you know, you don't have to. It's a little bit. I want to say the bill and payment is probably a little less complicated. But for Steve, how would he go about doing it? So at the point of sale, and he now accepting cryptocurrency, figure it out with the customer. And then I guess the bigger question for me is, you know, Steve has to turn around and take that cryptocurrency and buy more goods to resell. How does he convert it back to cash to go back and buy more goods to sell? So I know that's a lot of questions and a kind of a hypothetical scenario, but how do you see that working maybe in the future?
Yeah, and the best example is a credit card merchant services provider, right? I mean, if you have a third-party crypto payment processor, you never touched the crypto. You got cash. I mean, they received the crypto. It was a taxable transaction for the customer, and now you picked up cash from that. Just like I don't care that they swiped a credit card, you know, for their invoice at my business. They just deposited cash into my account from the merchant services provider, right? And then they take a fee to do that. It's the same. So it's not as hard as you think. You don't have to, you know, hold the crypto. Now, if you go with an in-house model, like my other example of set up my own wallet, set up my own, you know, plug-in on my website so people can just pay me directly with crypto, well, you're going to have crypto sitting in your wallet, right? And so you will then need to exchange that for cash, and, you know, either sell that back through one of the exchanges, or sit on it and you know, just wait. So there's some significant downsides to that, right? I mean, you're running the risk of volatility, you know, of the value. So like if you would have accepted crypto for payment 6 months ago and put it in your wallet and sat on it, it's worth half of what it was 6 months ago. So this is, you know, like, believe me, I'm not advocating for, you know, the fidelity of an investment in crypto is highly speculative, right? I mean, if let's just be very transparent about that. It's not for everybody. But I think what's happening is sort of the beginnings of something that is worth taking note of. And I mean, not only if your business, if you looked at this strategically and you sat down and said, okay, well, who is my market? What is my business trying to do and serve? And does it position me in a way that you know, meets my strategic goals as a business owner? As a local hardware store, I would be willing to bet that probably nobody's asking to pay in cryptocurrency, right? I mean, that is not, it's not necessary. But contrast that with, for example, let's just say there's a local software company and their market is millennials, and they want to serve the entire nation, or they want to serve internationally. They can sell their software to people in, you know, Asia or whatever. So those guys, I think it might, be something to think about. It's, you're going to reach, if you allow this and you accept crypto, I mean, you'll reach a younger generation with your goods and services. It'll resonate with them. If you want to sell, beyond your local market and into a nationwide or a worldwide currency, I think it certainly enables that. Another thing too is, remember I was talking about the nature of the blockchain and how reliable and transparent it is. One of the things as a business owner that drives me crazy, and I'm sure everybody else too, is credit card fraud or credit card chargebacks. And one of the nice things about a Bitcoin transaction is it is, I won't say impossible, but at this point in technological sophistication, virtually impossible to fake this thing. And everything is extremely transparent. You can track exactly who owned that coin. And once that transaction happens, there's no chargeback. So there's literally zero fraud, no chargebacks with Bitcoin transactions. And I think that's kind of appealing. I think there's something to that, that's worth taking note of. Obviously, the risks are serious, though, right? I mean, volatility of value and the hassle with the tax aspects of it. It's not government backed, and you can't, like you say, you can't use crypto to buy additional inventory or pay your employees. So you've got to, if you receive it, you got to convert it with a third-party provider or something. But those are some of the risks and benefits. Obviously, it's not appropriate for every single business, but yeah, it may be worth at least exploring for some kinds of businesses that are seeking to strategically reach the younger generation with a target market or a larger geographic base.
Right. Well, we're having this conversation today because even though it's been around for a little bit, it's still new, right? And I see, if we go back and watch this recording 10 years from now, how it's going to be different. So I guess, getting into your crystal ball, what do you think needs to change in our society or whatever to make this more of a currency in 10 years? So I think of like the movie Guardians of the Galaxy. Here I'm nerding myself out, but they're having some sort of a scene where he had to pay somebody with a unit, and so he pulled out his whatever iPhone of the day and he transferred units over to somebody else to pay for something. And I see that's kind of what cryptocurrency is. You have these whatever it is, and it's a digital unit currency, call whatever you want, and you can pay people with it or buy stuff with it and that sort of thing. I think this is where it's going. But I guess, what do you think what do you think needs to happen for it to get there?
Yeah, well, it's pure speculation, right? But I think we need to have the legal authorization to do it. I mean, I think, not an expert on this, but it's my understanding that that our Constitution doesn't authorize another currency except for the US dollar. I mean, does that mean we need to have a constitutional amendment? I don't know. I'm not a constitutional scholar. But I think that if you look down the road, we have continually sort of trended away from cash. I carry very little cash. I use very little cash. That being said, I do like cash transactions sometimes. And our society is definitely headed down a path of, more universal sorts of credits. Like, we have the US dollar because you have the United States of America and it's accepted within our country. And now internationally, as we've had the internet and the expansion of communication and literally instantaneous information across the globe. I think it has shrunk our globe significantly, and it's a probably a next logical thing that you're going to have more of a universally accepted method of payment in a form of some kind of currency. And the major problem with paper currency is, what's backing it, and is it supported by some kind of governmental standard. But with crypto, the beauty of it is it's very, very trackable and it's highly reliable, and so you can get a tremendous amount of trust that what you're getting is real. There's it's hard to say, Greg. I mean, I actually personally am more excited about the blockchain, the sort of the software that underwrites crypto. Crypto is just one solution that's using the blockchain technology. I would be very excited, and I would be a little nervous as a title company today, because in the future, if we can deploy blockchain-like technology to track real estate transactions, imagine how much faster and how much simpler buying and selling a house could be, or taking out a loan. The massive amounts of signatures and paper associated with borrowing and purchasing real property is it's antiquated, right? I mean, there's a whole lot of friction associated with that, and it's all sort of organized around ensuring that the people who are signing and borrowing the money and owning the property are the correct people, and we're actually getting the funding. And so we have these escrows that bring together all of those things into one location. I think a lot of that could be automated and minimized in a blockchain scenario for transacting real property from one person to the other. I mean, just look at the DMV and pink slips. What a pain to deal with that kind of paper for the verification of ownership of a physical asset. What if that was done with the blockchain? A whole lot easier. There's faster, quicker, less hassle. So I mean, I could just think of more and more examples. So that blockchain technology, I think, has tremendous amount of potential.
Okay. Interesting. Let me just real quick, another question on cryptocurrency. We talked about it's international. You can use it internationally, and if you're in America and you're buying something in Japan. But what is it based on? So the value has to be based on a dollar. Is it based on the yen? Is it based on the euro? So it has to be based on, because what it's worth in America for goods and services may be different than a hot dog costs $2 in the US. That same hot dog costs $4 in Switzerland. So where does crypto come in as far as the value and a conversion in different parts of the world?
Well, to be totally candid, I don't know. Okay. I mean, I think that it's I think that it's really just the value is what the value is, and it has to do with the demand. It's supply and demand function. Beyond that, I don't know that I can explain it, because it's not backed. It's not government backed.
Yeah.
I how you have stocks on different exchanges that are worth different amounts. You have the Asian exchange and so forth, and you've got our NASDAQ and New York Stock Exchange. I don't know that that's the same, for Bitcoin. I think with Bitcoin, it is what it is, regardless of what country you're in, because people are transacting all over the place. And yeah, so I wish I knew better to be able to explain that.
I'm asking these questions because I don't know anything about it. So I'm just trying to, if I was to get involved, these were just the natural questions that are coming to light is, what happens here and what happens there? And, if you do invest, what's it for? And I do see your point with the blockchain technology in those examples that you brought up. Those are, to me, the easy ones. The DMV, the real estate transactions, all those things that need to be recorded, we'll call it. somewhere where there's a database, a historical database of the chain of custody or whatever you want to call it. I can certainly see this that blockchain
Yeah,
technology working.
and those are actually, demonstrating evidence of ownership and title for physical assets, personal property, right? Cars, or real property, houses, or something like that. I think there's some personal property blockchain transactions are certainly beginning in the art world and other things. That's certainly started. I think it's important to share too. There's a lot going on in the blockchain and crypto world regarding evidence of ownership of digital assets. So previous to the blockchain, if I have a let's say I took a digital photo of Michael Jordan at the slam dunk competition in 1989 or something like that, and I have a digital photo of that, and I took it and I own that, and then I upload it to the internet and share it. You don't have any evidence of ownership. There's no way associated with that particular digital asset that I can prove that I took it and I have the intellectual property rights to that photo. And that's been the case for many years. But with the blockchain, one of the beauties of it is you can connect a block in the chain of title to a digital asset, like a digital photo or like a soundbite or a song or lots of other things that previously we didn't have any evidence of title for. There was no chain of title for digital assets. Well, that's changed with the blockchain, and you're seeing crazy stuff like the guy from Singapore that bought the very first tweet on Twitter for many millions of dollars, and it sounds crazy, but he wanted to own that, and now with the blockchain he can verifiably be the owner of it. Does that mean he's the only one? No, there's literally, like, I could probably go and find that online and download a copy, but technically he's the owner of it, and that's trackable, and he can sell it. And in the future, there's a chain of title associated with it, as there is with digital photography, as there is with up and coming artists and their songs, and they're able to get this these digital assets out there and share them with people. So there are some really interesting things now that we can actually track and with a high degree of trust the ownership of a digital asset from one person to another. You're seeing an explosion really last year of that kind of thing, and I think that's really interesting with what's happening. So.
Well, I see your point. I know there were several athletes that were selling a digital autograph on a specific photo, and that they were numbering them almost like it was a limited edition lithograph or something. And they're doing 20 of them, and they cost you $2,000 each, and you can own one of 20 of, well, whoever it is. If it's Tiger Woods fist pumping after he won this specific tournament with his digital autograph, and then that's the value, right? And you own that one of 20 of that specific image.
It's it's sort of akin to a famous artist. Like, what if you could have a we have the Van Gogh exhibit here in Fresno recently, and what if you had 50 signed copies that were done by Van Gogh, and they're autographed by him? That's worth something, right? And I mean, people want to own and invest in art, and because they care about it or whatever, because it's meaningful. It's a way to manage and store wealth, and they want to enjoy it and look at it on their wall. Well, how do you do that with a digital asset? Well, you do it the same way. That the obstacle has been tracking title to it, but now with the blockchain, you can track title to a digital asset, and so people are coming up with all kinds of interesting intellectual property, such as here's my picture with my signature, and it is signed. And once it gets on the blockchain, literally that asset is minted and deeply embedded in that block with long identifying key numbers that will show that that is a verifiable asset. So there's a lot of interesting things happening, and it's worth mentioning the NFT concept is an abbreviation for non-fungible tokens. Fungible is a fancy word for easy to exchange and so forth. So a non-fungible token is something that is more like it only goes to that person. It's sort of unique to them. And I'll give you the best example I've seen for an NFT. You could take a digital asset that I own and that I created. For example, you use the picture of the athlete with their signature, and I don't have to just sell that asset to one person. If that asset is worth $100,000, I can sell it to 100 people, $1,000 a piece, and that giving and selling 100 tokens, they call them, literally shows that we've taken that asset and we've done like a fractional ownership of that asset between 100 people for $1,000 a piece. And so I could invest $1,000 and own 1/100th 1% of that digital asset. And that's what an NFT is. It's a non-fungible token that says I own some or all of a digital asset. And that concept has just blown up over the last probably 18 months. And people they call it NFTing or whatever, and they're NFTing songs. I mean, imagine the ability, like let's say I'm not musical at all, but if I was a budding musician and I wanted to get my music out to the world, I used to have to go through a promoter and be discovered, and then the promoter had to like me, and then they would take my music to these people that might invest in my music. Well, today I can literally take a audio recording of my song, and I can put it out on the blockchain as an NFT, and people who are my followers on Facebook, Twitter, TikTok, whatever, and say, hey guys, throw in $100 and you can own up to 50% of my song. I'm going to keep 50% of it, or maybe I keep 51. And then if that song, makes a hit record and money comes through, you'll actually receive some of the proceeds of that song in the future. Do you see what I mean? Like, that is just, that's new. Like,
Yeah.
We haven't been able to do that very well previously. And it opens up a lot of interesting opportunities for sort of the fractional ownership, really, of digital assets. And I think in the future, we'll be able to do it with personal property too.
Wow. I mean, we could talk for like the next 8 hours on this. I know we're getting toward the end. Let me open it up to questions from our group. If anybody has a question, just you can unmute yourself and ask Gary a question if you'd like. Any takers? Gary, I guess I'll keep talking until somebody else wants to talk. When you this digital thing, and there's got to be a trust behind it, right? So you want, and maybe millennials are more trusting than my generation. I don't know, maybe it's because they played video games and they all got digital coins when they hit the mushroom with Mario's head or whatever, and they're kind of used to that. But I'm sure there's going to be some sort of, are you saying that scamming is not prevalent because of the blockchain and the algorithms behind it, that it's really hard to be scammed, or there's fraud out there in some of these things?
Yeah, it's because of the tremendous computing power it takes to verify a transaction in the chain from one person to another. If you just had one computer, for example, that was doing those calculations, a hacker can easily attack one computer and fake it. But with the blockchain, it's not one computer, it's literally hundreds, and you don't know which ones are weighing in. And if there's one that disagrees with sort of the collective, they ignore it and they reject it. So you could hack maybe 1 or 2 or 10, but you can't hack hundreds at a time. At least, That's what I've been told, and that's what I've read. And you just have these digital stamps literally from one, block in the chain to the next. And you can, there's a ton of transparency. I mean, for better or for worse, right? The transparency is really cool in a sense because you can always go back and find that information. You can verify it. You can have a high degree of trust that what I'm buying, I can see that chain of title, gives me confidence to buy it. But we could get into a whole different topic about transparency and, they like imagine when the IRS can see every single thing that you bought, when you bought it, how much you paid for it. And I guess, if you're not, or if you are the kind of person that is being honest with your taxes, then that doesn't matter to you. But there are people that don't like that, and they don't want it to be transparent. Imagine if you went into a divorce situation and you're trying to hide assets from your spouse, you're going to have a tough time with crypto, because we absolutely can track it. We can find out exactly what those transactions were, and if you stuffed some money or you sold it or whatever and tried to hide it from your spouse before your divorce, you'll get found out. So I've already seen in the legal industry, I've already seen petitions to go after and sort of put a lien, if you will, on crypto assets. I think those are now happening, and lawyers in different litigation contexts are going after people's cryptocurrency because they can find it. So it's a two-edged sword, transparency.
Well, speaking of that, so is crypto held, you said, as personal property, but can a company or an LLC own crypto?
Yes. Yeah. I mean, of course. From just the standpoint of a practicality standpoint, most of the third-party wallet providers are set up for an individual. Like, my personal Coinbase account. Coinbase is a third-party provider where I can have them hold my wallet, and that is an individual account associated with my name, not my company. They do offer corporate accounts, but those are higher levels of service that you have to spend. My Coinbase account's free, but if you get one for an LLC or corporation, I don't know what they're going to charge for it, but they will. It's more difficult to do.
Okay.
Yeah.
And I'm assuming if you were to accept Bitcoin or cryptocurrency at your law firm, then your company would become an account holder to hold that asset as payment under your company, right? So then you would declare that under your company taxes and whatnot, not your personal.
Correct.
Yeah.
I think we'd have to, that way, because I've got, it's my law firm's obviously not just me. I have a number of partners and of counsel, and so we have an operating entity that would probably have to be the owner of the wallet to receive the crypto.
Yeah. Well, like I said, we could talk about this for just the next 8 hours, and it's just very, very exciting on the blockchain technology and how you described it, and how it may be more efficient for us moving forward with some of these chain of title scenarios in our everyday lives. So we'll see if it becomes more mainstream with the crypto and receiving payment.
Yeah, I think it'll take some time. It's super early. I mean, crypto's been around now for, I think, about 10 years, but I mean, we are a decade in, and Main Street beginning to kind of think about it, right? I mean, so it's got a ways to go, and it's so volatile still, at least on the crypto side. But my personal take on it, and my message that I would hope to share with business owners is that not to ignore it. You don't necessarily need to adopt it. It just depends, on what your business is trying to do. But just be aware of what I think the really interesting part of it is, the blockchain piece, and that could have tremendous ramifications both for our our society in a number of different ways. All of our businesses are affected by chain of title of something, or at least in our personal lives, we're affected by chain of title of all kinds of things: vehicles, real property, you name it, right? And as our society becomes more digital, being able to document and have a high degree of trust in the transaction of digital assets, especially for folks who are, trading in sort of digital intellectual property, like a musician or a software provider, and to be able to document who owns that and how it goes from person to person, or fractionalize the ownership of it. I think that's very, very interesting and very exciting for the future. I think it reveals like a lot of new opportunities for businesses coming up in the coming years and decades.
Yeah. Well, Gary, it's fascinating, and thank you very much for sharing your expertise with us today. And we look forward to seeing what happens in the future. But I'm a lot smarter now than I was when we started our conversation today about crypto. So thank you very much, and we look forward to seeing everybody again on our Wake Up Clovis programs.